When I was a boy, my grandmother kept a small plant on her windowsill. Now, I don't remember what kind of plant it was, but I still remember that she watered it every morning, the same way and at roughly the same time. I also remember asking her once why she didn't just water it a lot once a week and get over with it. She looked at me like I had said something strange and said, "That's not how it works." I think about that a lot, not about the plant, about the look on her face, and about that idea that some things have their own pace and you don't get to negotiate with them. I now believe most of what matters in life is like that plant, whether it's building wealth, raising a child, learning a craft, staying married, or even thinking clearly. None of it happens quickly. And yet we live in a world that keeps asking us to measure ourselves every few weeks, every few months, and against people who are also measuring themselves every few weeks, every few months. Almost nobody seems to be playing the long game. And the ones who are, quietly, they tend to end up with lives worth paying attention to. That's exactly what this show is all about. It's called The Long Game. For those of you who've been here a while, it's the same show you've been watching as the 1% show, just growing into a name that better reflects what it has always been trying to be, which is conversations with people who've stayed with something difficult for a really long time. Most of my guests would be investors, but over time, I would love to bring on anyone whose life is a case study in patience, in doing one thing slowly for decades and letting it compound. The name of the show comes from a book, The Long Game, that I just finished writing, but the idea goes back much further than that. It's what I've spent most of my adult life trying to understand. I don't have a full answer, but I have guests and I have questions, and that's usually enough. My guest in this first episode is Vinod Sethi. We recorded this conversation in August of 2025 when I was preparing for the book. Now, Vinod has spent more than 30 years in Indian markets. He was the CIO of Morgan Stanley Investment Management in India in the 1990s. And since then, he has been investing his own capital, teaching and thinking about markets in a way that very few people do. He's also one of those rare people in finance who talks about markets and life in the same breath, which is exactly the kind of guest this show is built for. Here's a conversation. I hope you enjoy it. Great. So first question, the looking back at the very beginning of your career when you were just
Mm.
starting as an analyst and investor, what were some of the misconceptions you carried about this profession, and what did you think the job was about, and how did reality teach you otherwise?
Well, firstly, I was very young. I didn't, and India was also a different country in the 80s. We were still, per capita income was whatever, $300 or whatever. So the context is different. So in the late 80s, you sort of felt that you were coming from in India, which is under potential at that point. Today is a very different world. And you've gone to the superpower on earth. So there was that as a 26-year-old, 25-year-old, you'll have that natural sort of bias that, as to you're going, this is Wall Street and all of that. So more than any bias, it was just it was a different universe in a way. So you went from what was a 300 per capita country, and perhaps US was at that time, I don't know, forget the exact number, but 25, 30,000 per capita country. So there was that. So one had to adjust to that reality that you're actually in, not only in that economy, but you're in one of the premier banks working in that economy, and and you've been chosen to manage money. So I'd say the preconceived notions were not many. I mean, you just went wide-eyed. It's the way you would go if went to Disneyland when you were 10 years old. So it was just it was a lifetime's opportunity to walk in and work there that time. And so, yes, so those were sort of the, I'd say, the blanks canvas, or, that was the sort of context of that moment. So that's how that's how you went. So, you're learning everything, and you just pre-assume that everyone is and everything is smarter than you are. But then you slowly realize that that isn't the case. We quickly realize that, actually. And so then at the end of the day, the human, it's as human a place. New York is a Bombay. I mean, it didn't take long to figure out that working in Nariman Point or working in New York is, okay, similar cities, sister cities in some way. So you got into the groove very fast post that. So, but over time, you realize that human emotions are what they are. Markets are emotional. People in high positions are also human, and so over time, and that's called learning, I guess. That you keep moving, and so that was sort of the context of that era, and that's how it was.
So I think over a period of time, so you had a start with Morgan Stanley and very young at your age, and I think rightly said that there were some misconceptions. I think some preconceived notions, not many, but they were quickly dispelled with, I think, as you learned more into your career. I think the amount of noise and information and confusion that time, probably, I don't know, maybe you can correct that, may have been much lesser compared to what young analyst getting into the market or into the industry today is that a correct assumption I'm making?
Well, the ignorance of that era was lack of data. The ignorance of today's era is too much of data, but ignorance remains. So opportunities remain as a result. So as long as there's misconceptions and ignorance floating around, we investors have a job. So that continues. I would say the the earlier era of lack of information, we assumed that the internet era would make us all much more intelligent and better investors and so on. But I think it's led to the era of stupidity also. So you see that in politics, extreme people get voted into power. People, all sorts of things are going on in this world right now. So I'd rather not take names and so on and so forth. But we've transcended from an age of ignorance to an age of stupidity today. So that's okay. That's great. Because if it was an age of enlightenment, then we'd be making 1% returns. So essentially, it is important to recognize an age for what it is. So it's important to realize that information itself doesn't make you either a better investor or a better decision maker, but it is relative to uh, what is the psychological bias of that time. So making money in an age of stupidity is easier than uh, in an age of ignorance. So everything, swings one way or the other. And so I think we formed self reinforcing loops, which is if your social media will reinforce, self reinforce, if you think the earth is flat, you'll get more and more videos on why the earth is flat. And so does AI have that bias. AI also is being accused of self reinforcing and making you feel good. So there is all of that. So the bottom line is that as long as there is, if as long as people don't see reality for what it is, and if you can, then you can make a good investor. If you had to even broadly summarize, That is what it is, which is you capture in mispricing, because this sort of delta is shows up as mispricing in stock prices, and that is your edge, which if you can hone that down, if you can get that delta and get it right, then it's perfect. So, so how do you do that? Not easy, but then you don't have to capture every delta. So you don't have to catch every fish in the river. So let's assume the market is like a river. You're a fisherman. Okay. So you're interested that you catch a reasonable number of fish on a predictable, consistent basis. You don't need to know the whole river. You don't have to beat anyone. There's enough fish for everyone if they want to. It's not like a boxing match or a tennis match where there's one winner and one loser. The investment banking business is more like a fisherman's business. So, if you just do some, you catch sufficient amount of fish, you're home. So one shouldn't get overwhelmed with also too much of data, too much, there are thousands of listed stocks. There's so much there that you can get intimidated as a young analyst as to where do you begin. And so, like most young analysts, you believe that working 12 hours a day and, reading as much as possible, giving equal weight to all information that lands on your desk. So it's like an equal weighted portfolio. So, like I give you 100 research reports, you devote as much time to page one as page two and page three, because so on and so forth, then you're in trouble, because those pages are never ending. You will feel exhausted. You would have worked 18 hours a day. You would feel good that you're hardworking, but hard work has nothing to do with returns. I mean, the correlation is perhaps is a slightly negative correlation. So, it's not that you get better by staring at more and more data. So, the challenge in the investment business, unlike many other professions, is that there is some sort of a linear relationship between hard work and output. You're a factory worker, you're a dentist, you're a cardiologist, you're a lawyer. You've been taught since childhood to be on that road. But but I don't think that relationship holds up. I remember some odd conversation that used to float around at Morgan Stanley. I might have the facts wrong, but I think there was a very prominent global strategist of ours called Byron Wee, who was the head of global strategy in Morgan Stanley for decades. Very well known guy. He happened to be a good friend of Soros, or childhood friend, some link. They've known each other for decades. So one become a very wealthy guy. The other was also a wealthy guy, but Soros was. So Soros would apparently laugh and tell Byron, Byron, the reason I'm more wealthy than you is because I didn't have to come to office every Monday. I didn't have to come to office every day. So it's funny, but it's also profound. I mean, he is saying something meaningful. So to live with that non-linearity is not an easy thing to do, because it can, if you, let's say you worked very hard, but you didn't make good returns or whatever, it can stress people out, especially youngsters. And the ability to wake up when the woolly mammoth is in front of you and to be sleeping otherwise is an art that money managers need to cultivate. And so how you do that is a personal choice. I mean, I can't say do this and that. So how would I sort of do it? Like I'd swim every day. Okay. Because swimming is, one, you can enjoy swimming. The other is you can ponder over ideas. You can see patterns. You can do other things. And the great thing about swimming, you can stop swimming and start investing, for instance. So I'm just giving you one example. I'm just saying you can figure out your own pattern, but in to be in a relaxed uh, state where you're not um forcing. It reminds me of people at a railway station where they're waiting for a train, and many of them come to the edge and look whether the train is coming. You see, that is an analyst. He's hoping that him looking will make the train come faster. It's not going to. Okay. So you might as well relax. So when the train comes, it comes. But when it comes, you better be awake. So very often, the challenge in working in an investment bank as a money manager is that an investment bank, everyone's working 24 hours a day. Okay. You're a money manager, you're just hanging out. You're you're staring out of the window, wondering whether, you know, you should take 5% of HDFC or 10% of HDFC. And what are the pros and cons of both? And for that, you have to stare out of the window for a month, you see. But to anyone else in the office, you look jobless because, I mean, look at this guy, where everyone shows up at work at 7 and you're staring out of the window, or you're just like pacing around. Because what else can you do? So, to come to that conclusion, there's nothing else you can do. You can't work hard and come to that conclusion. So, it is just, modeling in your brain, managing risk, you're managing, you know, events, you're thinking of you're forming your probability sort of function in your brain as to, how do you, it's a fine line between being heroic and, crashing everything. In markets, it can happen overnight. And so, how do you pace these things out? So, now, in what way will hard work get you there? I don't know. I don't think so. So, I think analysts need to know that in markets, they need to cultivate that at the end of the day, you will get paid for pain and patience. It's a fair price. So, there was a very interesting interview of the NVIDIA founder recently. He's one of the largest market cap company in the world. And someone, I think, in one of the interviews asked him a question that given, same question that you're asking, if you had gone back to your younger self, would you do what you're doing? He said no, because only I know what nightmares I've gone through to reach here. So if I had to relive it, I'd never do this. It's shocking, but it's true. So at the end of the day, in investments also, whether you like it or not, you will have to pay you will have to the price you pay for significant returns is pain, patience. That doesn't go away however bright you are, and you'll have to wait for long periods of time, and sometimes stocks give you a return in a what you waited for a decade gives you that return in 3 months. It happens. So now those are skills that it's you need to cultivate. I remember there was some trader, I forget the exact detail, but this is part of folklore at Morgan. There was a guy who in 87 shorted the Dow just before, at about sort of early in the year, not October 87, when there was a big crash. He was expecting a big crash. So he was seriously short somewhere May, June or something. So about 3, 6 months before that. I could be wrong a bit on the facts, but the fact is less important. And so apparently the market kept going up. And this guy went on a vacation. He said, I'll return when the market falls. Okay. And October 87, when the day the market fell, I think he made, for that era, he made 55 million or something for the firm. And I think that quarter also Morgan Stanley was profitable, the October 87 quarter, thanks to one guy with insight, with patience, ability to take pain and hang in there and and get it. Yeah, it happens. So I mean, the reason I'm giving some of these examples is just to give context to young people that youngsters sometimes feel like till that time you've gone from first standard to second standard, third. There's a linear. You would like to make 20% return the first year. You like to make and so on and so forth. But the Sensex went below 3,000 every year between 94 and 2003. Every year it went below 3,000, and so now that is what, 9 years. So patience. So anyway, the stocks did well and so on and so forth, but it wasn't easy. So for people who lived through that era, it was a tough market. So I think for analysts, I think you need pain, patience, as I said. You need clarity of mind, insight, and declutter your brain in whatever way you can. I think these are vital, and not everyone has it. So I think you're probably born with it, and if you're born with it, you get better. So there are many bright guys I know, much brighter than me, who are poor investors. But that doesn't mean but they make careers in entrepreneurship, they make careers in other things. So they've been investment bankers, they've been deal makers. So, you have to figure out early that whether you're cut out for this. So otherwise it can be an extremely painful career path. Yes, your fantasies of big money is being made and all that. But the mortality rate of all the players since the 80s and 90s is very high. So there's a very small universe that gets glorified, but it's probably almost like a statistical uh, uh, oddity. So a senior charter director met me, and he said he told me like that I invest only in startups and uh, and unlisted situations. So I said, why? He said, I can't handle daily price movement. I can't, I'm paralyzed. So now, so the great thing about him is that he knows what makes him tick and what doesn't make him tick. And because he's figured that out, he's done very well. Not that he's done badly. I'm not saying but if you lack that ability to have this uh, skills, then you should reassess. So that's what I would tell young analysts that, Wall Street movies, Hollywood movies, everything makes it look racy. You see billionaires and, I mean, a lot of Wall Street channels are like, sports channels now, everything looks racy and so on and so forth, but it's not. So it's at the end of the day, a challenging, maybe boring business where you just have to spend a lot of time waiting very often between action points. So I always caution youngsters because I see a lot of that lots of youngsters get into it. Then there's also, I find that youngsters feel the peer pressure today. That, some other 20-year-old has done this and my friend is doing this and that. So there is that. So that is a big danger. The big danger is that this isn't a tennis game. And if you, I mean, market in a funny way is like a mirror. If you suffer from greed, you'll get screwed. If you suffer from fear, you'll get screwed. So your biases will finally show up in your outcomes. And so there's so that I think is also, I find among I meet a lot of youngsters. I hardly meet people of my age group. Prefer to meet 20, 30, 40-year olds. It's because, they're energetic and I learn a few things from them also as to how they're thinking. So sometimes I feel that they unduly put this pressure on themselves that, they should free themselves a little from this competitive pleasure. Because the guy who does well over a decade, over to 3 decades and 4 decades, isn't the guy who's winning the game every day. I mean, I think Warren Buffett probably made 99% of his money after the age of 60, you know. So at 55, you would have just been a wealthy guy, but not a legend. So he's been playing that game for 50 plus years, and he's gotten there. So so that is that is but the statistical averages are, I think, the statistical odds of young analysts and people wanting to go in Bollywood or Hollywood may be about the same. The hit rate will not be materially different. So every 100 people who want to do it, I don't think it can wear you out if you're not self-aware about whether the skills you have are or your strengths align with what the market requires. So and very often health suffers as a result. So lots of people also have health issues as a result, and that comes from that little distortion. You can't sleep well at night. Everything adds up. So, and there are always events. COVID came along. There was 2008 crisis. There was the World Trade Center. Rajiv Gandhi gets assassinated. When is there not enough reason for you not to sleep well at night? There's endless reason. But if you can sleep well every day, that you're a money manager and you don't miss out on your sleep, that's very important too. And that's also a litmus test whether you're cut out for it or not. If prices make you sleepless, then you're in trouble. Or if prices make you irrationally happy and you want to hit the bar daily, and that's also a problem. So, because in both cases, you'll get hammered if you don't sleep well or if you drink too much. So, yeah. So, the ability to make a lot of money and go to a bar and drink a glass of milk, like Phantom used to in his comic books, a long time ago, then you're something. Then you probably, uh, or if you make a lot of money and you still take the same taxi home, glory to you. So these are some of the habits that you need to also cultivate as a young person. So one of my friends met, he was studying at Columbia. He was a prominent industrialist in North India. So he was in Columbia University, and he was taking the subway to go downtown. And then this was at night, and then he saw some guy in a suit who looked like it is Warren Buffett, but he couldn't believe it. What the hell? I mean, like, 9:30 at in Harlem, there's this guy who looks like Warren Buffett standing at the subway station. So he, like a nice Indian, went left, right, it peered into him. So then Warren Buffett called him and said, like, what's it, what's up, son? So this guy asked, I'm sorry, but are you Warren Buffett? He said, yeah, I'm Warren Buffett. So he said, what are you doing at the station? He said, I'm going downtown, just like you. So now a guy who can do that is probably fit to be a billionaire. So that is so all these things. There are some certain qualities that many of these people do share. The ability to be grounded at all times, because unless you're grounded, you make a poor money manager. If you if you're not if you don't see the human situation, the human condition, then you'll pay a price. In some other businesses, possibly you can get away in a manufacturing and setup. Maybe I don't think you can, but anyway, I don't know enough about other uh, professions. But this is a common theme I've seen. So, for instance, I had and so this is what I tell young analysts also, that whenever I used to go to London, I used to meet. My final meeting was always with a friend of mine who was, I think, the heir to a 500-year financial empire of Europe. I won't take his name, but his family's been having good wine and food and wealth for 5 centuries. And so I would always end my last meeting of the day would be in his office. So I'd come in a cab and get off in his office, and so we chat about the movie. It was an interesting chat. And then he would say, "So how are you going to the airport?" So I keep quiet because I know he'll recommend me to take the subway with him, the underground, because he lives somewhere on the way. So I say, my car's waiting, but I'm saying, like, I don't know what I'm doing. He says, "Yeah, okay, let's take the underground. You'll get another 45 minutes." And so this heir to the fortune of it's a crowded underground train. And I'm just laughing at the fact that no one in the train knows who I'm talking to. But this guy's unaffected. He's sitting there and he drops off. And then I go to the airport. So I think analysts should make an effort to step out and meet interesting people, because you can't learn by reading. You can learn these things, change you fundamentally when you live that. So I did the same thing dozens of times. And I'd say that taught me a lot about uh, how you should be when you're wealthy. And unless you touch and feel situations like this, it might just sound like fantasy, and that you think every guy, the first thing you do is to buy a Maybach and float around. But yeah, so I mean, so many well-known, but the top money managers of our business would take the train home in New York and live in rented homes. and walk to the office from the station. I mean, it's so in Midtown Manhattan, you'd meet the who's who walking to the office. I mean, I've seen I've seen like all the legends. I've seen them walking on the streets. So so being grounded, being real is and know well that money is a flow. It can disappear also. So don't identify it yourself too closely with wealth, or don't live under the delusion that it'll be forever. So I remember Parvinder Singh was in our office, ran back seat chairman. I think it's 4 or 5 years before he passed away. And he had great plans, this, that, and the other. And then look what happened. I mean, his children landed up in prison. Lots of things happened. I mean, it's very sad. But that's the nature of money, nature of. And why talk that far? I mean, let's talk about Ratan Tata. I mean, I've seen him. I don't know whether I've spoken about this before, but like is raining very heavily in Bombay, right now. I think this was in the late 90s, perhaps. It was raining very heavily. And this was after the Asian crisis, and I was sort of managing the Singapore office also. And so uh, all traffic came to a grinding halt about 3 kilometers before the airport. Total stop. And so my option was to wait in the car or go walking in the rain and catch the flight. So I said, okay, clear decision, no debate. So I got off the the car and I went walking to the airport, fully drenched. I see no one at the airport. There's one guy in a suit about 50 meters ahead of me, looking, carrying this and walking. And as I come closer, I thought it was Ratan Tata. I caught up with him and I said, like, why are you walking? So he told me, why are you walking? I said, listen, I have a job. I'm an employee of Morgan Stanley. I just laughed. So he said, no, no, I also have some important work. Uh, so there were two of us walking all the way to the airport, which is 3 kilometers. And then we got into and Singapore Airlines was waiting there. And so they had towels ready for us because they heard that Ratan Tata is coming. And thanks to Ratan Tata, I benefited also. So I got a shirt, I got a towel, I got upgraded to first class, so on and so forth. But look at Mr. Tata. I don't think even employees would do that. Walk 3 hours, 3 miles 3 kilometers in the rain. And but he was doing it and carrying his own luggage. So these are marks of greatness in my view. And so I can tell you many such incidents of Mr. Tata. So youngsters should know that it isn't about glitz and glamour and being seen at the right places, but it is being so well grounded and self satisfied that you can do all this, that you can walk to the airport. So I think people should put themselves in situations where they they can witness such things. So I think getting out of the office, factory visits, going here and there is helpful. Meeting other money managers, getting out of your comfort zone. And then you'll see greatness all around. You will not see, I'm not saying greatness exists only among the wealthy money managers. There is greatness all around. So I remember once I again, talking about dream, once I got into Bombay airport, and there was like the old Santa Cruz airport those days. There was like 3 feet of water outside. And this is like 1 a.m. So there is nothing, my car, no car, nothing. And there's this one girl at this, one of these cab companies, Akbar Travels or whatever. So she was there, some young kid, 22-year-old girl. And so I went to her and I said, "Can I, is there any chance of getting a taxi?" Even I'm laughing, she's also laughing. And then she says, "Okay, let me try." So she got on the phone, she went out in the water, she hustled and screamed and shouted and got me a taxi within an hour. Somehow. She doesn't know me. I don't know her. She's just another ordinary Bombay citizen doing a fairly low end job. But I was amazed at her commitment, you know? And only good things can happen to such people. So greatness exists at every level, and your ability to see that is important. It need not come in a Mercedes. It can be just that one person out there. And there are many such people. So I think a good job of a money manager's good job is to see how the inner DNA of a person is. So I remember looking at a company. I'd gone for a company visit where I found the promoter spoke very rudely to the security guard. You know, threw his weight around and so on. That is enough for me not to invest in him. You know, and the stock also went to zero. And I also went with Bridgemore Munjal for the Hero Honda plant visit with him. And at least 500 workers touched his feet while we were walking around. Okay. Now that tells you something. And we took a large stake there. I, in fact, went to the Haldiram in Calcutta when it first opened. They had opened one big, what do you call it, a food court. I think it was some 1 lakh square feet or some, it was very big. First of its kind in India in a large city. So he had set this up, and so I went to his office. I had heard about it, so I said, I want to go there. So those days I used to wear a tie and so on and so forth. So when I walked in, the Haldiram owner thought there's a raid on him. There must be some income tax, some ED. Well, some guys come to raid him. So he panicked. I said, none of that. I mean, I just said, like, I want to see you. I heard you're great, so I'll just come to see what you're doing. So I realized, because we had some common friends, so he quickly understood that. Then he took me around his facility. And the amazing thing about this guy was he didn't speak a word of English, by the way. He didn't even know hello. But he was a super bright guy. I absolutely admired him. But as we were walking around, every repeat customer he saw in that store, he was touching their feet. The owner of Haldiram was touching the feet of his customers. He touched the feet of at least 25 or 50 odd regular customers he saw in the food court while he was taking me around. I didn't have to. I was pretty sure that day this guy is going to become very big. No number can tell you that. But I just knew in my gut that this guy is going to be big time. He just sold a stake at some fancy valuations. He's earned every penny of it. He was that way when he started. I mean, amazing. So So you have to have a certain pattern recognition. You got to be able to see under the skin of the matrix. You just can't see you just can't see numbers and say this will happen. So your ability to see things a little more as to what the intentions and the motivations of the investment that you're making, of the person driving that investment, I think you'll have a better idea. Your odds of making money will be higher. So in this clutter, as you said, there's so much of data, there's so much of all this. But who's going to tell you this? Unless you step out of your office and you actually, I didn't even have a appointment with them. I just walked in because I just saw that building. And I think youngsters should know that the world is much more receptive than you think. You know, when I was a youngster, no one stopped taking my calls. I mean, Rahul Bajaj will also speak to us. Mr. Chidambaram would kindly speak to us. Mr. Manmohan Singh would kindly speak. The world is helpful. There are enough people, whatever you say, whatever, you say, at the end of the day, this will be a common experience of people who've, uh, who've broken out in early age. They'll always say that they found everyone helpful, you know? So youngsters should make that, not feel too reticent about making that phone call. An accomplished guy gives a discount to a young kid. He's happy that he's caught. He's okay to he's okay if the young kid is stupid. He's not, you know, he will give you that. He will try to help you if you can, if he can. I mean, there'll be some arrogant guys, of course, but my own experience is that people are more helpful than you think. So I remember writing I mean, I had very little pocket money as a kid, so I developed this crazy habit about writing letters those days, postal letters. There was no email, of course, in the 70s and so on. I remember writing a letter to Indira Gandhi. I don't know what I wrote also. I was a high school student. But the funny thing is, she replied. So I wrote on Monday, and my mother opened the letter on Friday. She was shocked that Indira Gandhi is written to a kid who's like just gone to school. My point is, if you make the attempt, the world is more helpful than you think. So that optimism should be there among youngsters. And don't hesitate to reach out. And this is a common theme, even if you hear Steve Jobs and Gates and everyone, they'll all tell you that Steve Jobs got an apprenticeship at Hewlett Packard when he was a school kid because he got his number from the yellow pages, from the white pages. There used to be telephone directories those days. And he found that Mr. Packard's number is the thing. So he just called up Mr. Packard and said, like, I'm Steve Jobs and I want some chips or whatever. So the guy gave him a job. So break out of the mold. So in this clutter, I mean, I'm saying all this because these are sort of your breakout points, if you will. If you make that attempt. So yeah, I went on a monologue.
No, I think
So
that covered a lot of questions. In fact, so
yeah,
I had a lot
I
of
thought
questions on
I
that.
saw
So
I saw some of your questions.
yes, yes,
So
yes,
I just sort of, since this is for the young analyst,
yes.
uh, I'm just sort of trying to say things that and giving them real examples rather than preaching, about this and that, as to how I mean, these are some of the strengths you need to have, and this is how you need to break out and create opportunities for yourselves.
Hmm. And great, I think you mentioned about Steve Jobs. I was just reading, I think, one of his biographies where they talked about and I think it was Steve Jobs who talked about the power of being naive, right? When you're starting out, because when you are naive, you are not sure that something cannot happen, and because you know that something cannot, or something, you're not sure whether you are going to do it or not, because you think that you're well equipped to do that, because you're not really scared about that this thing cannot happen and I cannot do it and nobody can do it, and that makes you well equipped to do that. So a lot of
Oh,
stuff, right?
absolutely. Absolutely. I still ask the dumbest questions and start from, building blocks. Even today, I'll ask if I don't know something, I will ask what it is and go by building blocks because to me, it's a mark of confidence if someone can ask a dumb question because he knows he can figure it out block by block. So never get intimidated by what you don't understand. And there's a big mistake investors make, which is especially if you are, say, for instance, I was recently uh, meeting a defense company, which was organized by a lot of the big names on Dalal Street. So the guy had come to meet me, and so we were talking, and I realized that sometimes investors, when you don't understand, for instance, say tech, or you don't understand, you know, basic laws of science and so on and so forth, you hesitate to ask the simple questions, and you run the risk of, since you don't understand, you take it as a given that they might be right. And so I found that to be the case in this. And, it's better to ask dumb questions and know that if something can't be explained to you, then there's either a catch or you shouldn't invest. So always be naive enough to ask the simplest of questions. And simplest of questions can, you ask a series of half a dozen questions, you will either get the answer or you'll know that the other person doesn't have an answer. So yeah, simple. Never hesitate to be naive, as you said.
I think you mentioned in the previous response that a lot of these things are unlearnable or unteachable because you're born with them, like the idea of curiosity, the idea of being grounded, right? So most of the time we cannot really learn them as we grow up. We either born with that or we're not born with that.
Yes.
Specifically about see, being an analyst in an institutional setup, and most analysts work, if you're not your own investor, right, you're working in an institutional setup, whether it's a sell side or a buy side, right? And you mentioned that it takes a lot of pain, a lot of patience to come to this kind of an idea, that it takes a lot of patience, a lot of pain to really become great at your art, whatever you're doing as an analyst, right? How does, in your experience, so you started work with Morgan Stanley institutional setup. In today's world, I think the incentives are all, I think, almost a lot of misaligned incentives that institutions work with, the short termism. Given that setup, and also the failure rate that you mentioned about that, being successful after long many years is a statistical oddity. Given all that setup, how does an analyst working in an institutional setup really create that patience or have that luxury of time to go through that pain to become a good observer or good thinker? Or do you need to seek out
It's
mentors? Do you learn from experiences? Is it pure luck? How do you deal with that?
good question. It's tough. It's very tough. The incentives all misaligned, and the bigger danger is that you might learn the wrong lessons, or you might just burn out as a result. So I think a few things are important. One is try to find your bosses need to be a little more longer duration. If you work in a setup which is looking daily NAVs and so on and so forth, then you're sort of doomed. Uh, so you need to get lucky also to have a wise boss. So and very often people learn from so I would actually give credit to my bosses at Morgan Stanley, not me, to be honest, and I really mean that, for being patient with me. And I mean, hats off to them, really. So that is the missing side of the equation that you don't see, that there is your environment is important. But there's a contra example to that, which is like someone like Julian Robertson worked on the sell side and started Tiger only at the age of 49. And so took the he took the he concentrated that short-termism experience of being a sell-side broker, learned enough. So it's up to you. You can sit in a gutter and also learn, and you can sit in a Taj Mahal and also not learn. Okay. So he started Tiger at the age of 49 or 50. I mean, I could be wrong a little bit here and there. And I think he went around trying to raise money, he barely managed to raise 8 million, out of which I think 4 or so was his own money, and so on. I mean, my facts may be a little fuzzy, but the broad story is along these lines. So, if you want to learn, as they say that, Satyuga is so much better than Kali Yuga, right? But they say your chances of spiritual development are higher in Kali Yuga than in Satyuga, because shit happens there every day. Okay, in Kali Yuga, it happens once in 1,000 years. So now you can take shit two ways. You can get enlightened by it, you know? Okay. If you develop an inner silence, you see the comedy of it all. Okay. It's stressful if you partake in the game. If it's a movie, you'll learn and you'll become very good investor. If you're born with it, you'll learn one way or the other. So yes, it is what it is. And it's a madhouse. And let's face it, the market is a crazy place. Everyone's the collective. The question is basically, how do you profit from a situation where millions of people want to get rich overnight? That's 90% of the market. Okay, so it is a madhouse. So how do you create that stillness in you wherever you are? So it isn't the borrowed piece of of Mount Everest or Taj Hotel or somewhere that you're sitting. But if you can sit in this chaotic fund house of yours, where everyone's crazy and you could get fired anytime. Okay. And you can still create a stillness and see the see the it can make you a very good investor. You'll understand psychology better than others. So there is no excuse and nothing can stop, you know. You can't stop a guy, basically. So it's up to you. So it can be an excuse, it can be stressful, or like Julian, you can put all that to use one day. So that also is sort of what do you call it? So as Buddha famously said, no. So apparently Buddha got enlightened and he chose to be silent. That's the story. Then all the gods descended on him and said, like, listen, you should preach and talk and help humanity. So then Buddha said that, listen, I don't see the point of it, because a person who has to get there will get there anyway. Yeah. And how much ever I preach, a person who doesn't have to get there will never get there. So then the gods came up with a nice answer and they said that, yes, what you're saying is absolutely correct. But there are some people who are in that intersection set who might benefit from you. These are not mutually exclusive sets. There is a small segment of people who will benefit from your teaching. So that's when Buddha apparently started preaching. So I think same thing applies to markets. You see? So yeah, you can live by excuses or you can live by outcomes. So I think very poorly of a guy who starts a meeting, we say I was poor, I struggled, and I'm like, you know, puts me off right away. He thinks excuses will generate sympathy and therefore I will invest. Never. I'm looking for a guy who looks for no excuse. Only outcomes matter. So once you get into that mindset, then then so that's the other thing, that people invest in excuses, especially young people. So some guy came to raise looking for some money, some potential one investor who want to set up his own PMS or whatever. He spent 45 minutes telling me how uh, his family lost everything. He came up the hard way, this, that, and the other. And after 40 minutes, he asked me, "Do you have any questions?" I said, "None. I have no questions. Since you're so much into your own greatness, this is really patting yourself on the back that you are that you have. Everyone is a hero. Everyone has adversarial situations. So drop off. So this is what all my young analysts who worked for me, I would say that I want no excuses. I don't want to know whether something worked or not worked. Not interested. Only interested in outcomes. Whether you come to office at 9 o'clock in the morning is also of no interest to me. Whether you come at all is also of no interest to me. I'm just interested in outcome. I don't want to know you. I don't want to know your wife. I don't want to know your kids. I don't want to get into that. So I think if you start creating that that attitude, I think that sets you. This shortens your learning curve. You'll get there faster. Excuses tend to give you the wrong incentives, as you said. These are the wrong incentives, basically, because it doesn't really. So lots of people who I've worked with are still come meet me and all that. They might have thought I was very tough at some point than the other, but at the end of the day, many of them still, all of them, many of them talk to me and are in touch with me still. And so I think uh, you must cultivate that attitude, because only then will the world take you seriously. You know, so stop living on excuses. That I have a handicap because I was poor and I was rich and I was this and that and the other. Drop all of it, and you'll also end up destroying your ego. So it's good. Yeah, your self-created greatness. So yeah, and I think young analysts should also know that their job is to make sure that they make their boss's life more comfortable rather than, I mean, the boss is not a school principal. You say you're working in a fund manager now. Your boss is what makes the boss comfortable? You come out with brilliant ideas, you know, and everything else is a story. Let's be clear. So your incentives are sometimes misaligned because you're fuzzy also in your head, and you're using all these strategies to survive, and that's not really helpful. You're better off. I mean, if you're a straight shooter and you come out with powerful ideas over time, I mean, you will be sought after. So, so there are two ways to survive. One is to be so good that no one can live without you. Or then the other way is to live by excuses. So it's the blue pill and the red pill out of Morpheus's great line. But it is. I think that is what it is. I mean, I love to tell this to youngsters because I think it clears the clutter in the brain very often. It can, that everything else doesn't matter, so much. So so this I think I think youngsters would benefit from decluttering themselves and walking on a courageous path like that, you know. And they will, I think they will reach their full potential faster if they take that risk.
Mhm. I think it's good. I think you mentioned about decluttering, and that's I think where my next question was coming from.
Yeah.
Especially in today's world, I think you mentioned that when you were starting out, it was the scarcity of information, or right? In today's world, it's abundance of stupidity because there's too much information out there. And not many questions and not many people willing to really sit with their questions because everyone of us is wanting to seek instant answers, and we're getting confident answers from people, we're getting confident answers from AI, and that adds to our own confidence that whatever AI is saying, whatever we think as the first idea must be the right idea. So there's too much confusion out there, the amount of volume of data, opinions, right, out there, right? So uh, when you talk about decluttering, in given all the situation all around the confusion and data and opinions, are there any specific mental habits or disciplines that probably you've learned to cultivate and you see around in those good analysts that can really make a difference between someone who either drowns in information and opinions versus someone who learns to filter and focus on what really matters? So any mental habit or any ideas on that front?
Yes, I think a couple of thoughts on that. One is what you said is absolutely correct. I think education gives us the wrong incentives. We have to answer questions. Whereas the real skill in life is to ask the right question. To ask the right question. And the other is, so in all this data, asking the right question will give you the multi-bag as to what is it. So what do I mean by the right question? So right question can be, how do you prioritize on a totem pole? How do you tot- prioritize what is most critical, separated from important, separate to necessary, separate to would be good to have? Okay. So you equally weighting everything is a big disaster. So I don't need to know the last final number in a balance sheet. I'm not interested in that. I'm interested in just that what critical Firstly, the critical important. Firstly, I'm segregating what is the critical, what is the important, what is this I do all the time, not only in balance sheets, in everything in life. As to what I should do in the day, also the critical, because there are only 24 hours in a day. There's cluttering everywhere. So you have to abandon ship. You can't do everything. You can't attend your grandfather's, sister's, brother's marriage, and also there are only so you there are many things you cannot do. So you start with a hierarchy as to what are the most critical things which has the highest delta that I need to do today. Or even when you're studying a balance sheet or company, what is that one thing? What is that one critical thing which can be the breakout here, or which the noise is hiding? You see? And so leave the answers to the world. Everyone has that information. So I'm not impressed by someone who says, I know the debt equity ratio and the average inventory days of a company. Okay, ठीक है, होगा. So, but that you equal weighted everything. You had that half an hour. If you can figure out what is the key driver, which if you get an answer to, can make this a profound investment, or you know that this is going to not do well. So the ability to declutter comes from a state of mind where you're looking for hierarchy of choices to make. Okay. And you're not getting confused by the 20-page reports and 30-page reports. You're not. So now, if you read a 50-page presentation with this mindset, you'll be able to read it in 5 minutes. And you'll also find the fault in the presentation. You'll find where the flaw is. So very often people would like get shocked that they would have worked a week for a presentation to me, and that one flaw in that whole 50-page, I will point only at that. And I would have read it only 5 minutes. Everything else they've done right. So that's not because I'm a genius. I'm not. I'm just saying because I'm looking to I'm looking at that key question and whether I'm getting a clear insight out of the presentation. If I'm not, it is very impressive. Even Chat GPT produces a great presentation today. So it's not going to make you a better decision maker. So, so these are habits you need to cultivate. So you also can't get into the habit of enjoying reading for its own sake. So I'll read I mean, I'll force myself. I'll give myself only 10 minutes, say for instance, to say read the Wall Street Journal. Okay, and I'll read it cover to cover. But I can also spend 2 hours reading it and enjoying it and having a cup of coffee uh, and get nothing out of it. Okay, it might be fun, but then you have to decide. Those are the choices you have to make. So I'm giving these suggestions because we live in a world of clutter. There are 100 podcasts to watch. There are 100 self improvement things. There are books and this and that. Nothing going to help you. But if you realize that the real shortage in life is time, okay, and that so you don't have the luxury of getting the last piece of information digested and so on and so forth, and feel you've achieved something. You've achieved nothing. Okay. So give up this completion habit, like you passed an exam. There is no exam here. Okay. So you're so you have your only shortage is time. Your only weapon is time. And so how do you put it to best use? And you need to sleep 8 hours a day. You need to relax for 8 hours a day. So you basically have, how much time do you have? So the return of time that is more important than anything else. I'd say more important than money, return on equity is return on time. So, so if you cultivate certain, you're conscious of it, you'll do something about it. Otherwise, you become a 40-year-old before you know it. Life will take over. So, if you're aware of the passage of time, and then you have that sense of criticality and that it'll never come back, then you'll do something. You'll read a balance sheet differently. You'll read all data differently, and the odds are you won't spend half a full day watching cricket then, because what you did, you just chased a ball. Okay. So you ask me, have I watched cricket? No. Do I watch a movie? No. Because that adds 20% to my. So to me, time is important. So whether India won or Pakistan won a cricket match, I mean, a day is lost. So I'm not criticizing people who. It depends on what you want to do in life. I'm saying if you're a young analyst, there's so much leakage of time that you can, in a world of so much clutter, you contribute to the clutter by having habits where, like, I remember I was told, the chairman of the firm had told me that you should learn golf. Okay, at Morgan Stanley. So I was actually taken to a coaching lesson. This is really funny. That where I remember it was in I think the chairman was even standing there. The coach is teaching me. So he asked me to hit a ball. Okay, so I hit the ball. Then I stared into the sky and I flung my golf club. I told the chairman, I don't want to do this. Because suddenly I thought about this, that I'll be hitting a ball. 6 hours gone, just so that I can get to know someone. Okay, I mean, I'm not saying it's a good, I'm not criticizing the sport. Don't get me wrong. I'm just talking about my priorities. So, you know, it was, yeah. So unless you actively work at decluttering, first you have to declutter your time. You have to expand your time to the best possible, because that's your only nuclear weapon in your hand. Okay. And what compounds is the way you spend your time. So it doesn't. I think that has to be a conscious habit that young analysts should create. Earlier the better. Because I think employability now is between the age of 20 and 40. I think we're entering an age where most people will be unemployable at 40 unless they really practice some of the things we're discussing now. Because there's AI, there's commoditization, there's everything. So you can't just cruise along and retire at 65 anymore. You're irrelevant if you don't. So I would frankly argue that some of the things that we're discussing are probably the way to survive the new era. This is, I think so. So, so how do you make yourself relevant? So an analyst had the time to, I had the luxury of 3 days to come up with a report on an idea that I gave. And I mean, I'll give you an example. So I was very curious to know, for a long period of time, that what was the history of the East India Company and what did its stock price do, and link it to events in India. What actions in India to the stock price of East India Company, right from 1600 to 1860 when it shut down. So it was always in the back of my mind that this is like a thesis, that, and so my idea basically was, my suspicion was rather, is that all actions of East India Company in India were really motivated by its stock price in London. That was my basic thesis. So I was decluttering the entire history of British India. And you say there was a battle of Plassey, Panipat, this, that, and the other. Okay, fine. But I wanted to look at it from a capital market point of view. So I struggled for years. So I was always struggling, like, how do I get this done? So, but now came AI. So I was thinking, maybe it'll take me 3 months, a year to figure this out and this and that. And I'd always tell people that do this as a PhD thesis, wherever you are, suggest this to your some university and do it. No one did it. For years, I told people. Then I got into AI. Then in a so I it's I went to multiple AI engines, and basically what I did then is this question I'm saying is from the sharp questioning point of view. I'm saying this to explain how sharp questioning is more important than information. That's why I'm telling you the story, which is I just started by sharp questions. Okay. That first breakdown in decade by decade, 16 to 1610, 1610, 1620, and so on and so forth. So, like 26 slices of time. And tell me what major events happened every decade and what did the stock price do in that decade. Okay. So, you cluttered 260 years of time. So, AI being a useful slave will do exactly if you what you asked to do if you ask it sharply. So I did all that, and then I got a great insight into East India Company, which I probably wouldn't have got by reading 3 books on East India Company. There are many books on East India Company. I've seen them, but they're descriptive. They're no one's linking. I was looking for a different causality. I was looking for what I'm basically saying that the stock price was the motivator for actions of East India Company in India. Or at least I would like to research that. I'm not saying I concluded. So after all of that research, I got an insight into East India Company that I think is pretty interesting. Again, why? Because of sharp questioning, proper questioning, and so then the AI. So then I asked AI, so what do you think makes the stock price tick? So let's look at that. Why do you think? When did the prices go up? When did it go down? So then it went into a bit of a tizzy. But then the conclusions were pretty obvious that when they were expanding their coverage of India, the stock price was going up. And when they stopped expanding in India, the price would go down. So what's my point of saying this? My point of saying this is not to describe about the East India Company, but I'm saying we are in a different world where if you are if you can translate some idea or hypothesis of yours into sharp questioning and don't bother about reading too much and looking at other people's answers and in a scattered way trying to find your questions answered. Today, those tools are available for you. I mean, the same thing to come to this conclusion, I probably have to sit in a library and be reading all sorts of stuff to come to all of this conclusion. But today, all of that is possible if you ask the right question. So basically, what would have taken 10 analysts to give me this data over 3 months, 260 years of financial history, its linkages, and so on and so forth. All that job has been eliminated by the new tools in our hand. So for a young analyst, the option of just comfortably working on collecting data on East India Company is no longer a guarantee of $100,000 job, is what I'm trying to say. So they better up the curve and learn how to. So you're better off uh, learning to use the weaponry that is now in your hand and make that a useful slave and put it to use. And the young analyst's job is also reinvented in a way, or will get reinvented in a way. So, I gave the example of the East India Company just to say that, because this is a classic example of what a financial problem an analyst would face. He'll be asked some questions about, whatever, ITC, Hindustan Lever. So I was frankly looking at another question, which is, why has Unilever Indonesia and why the ITC equivalent of cigarette company in Indonesia, Gudang Garam? It's a famous. So these were sort of the equivalent of the Unilever in India and ITC in India. Both those stocks have collapsed 90%. So I kept asking analysts, like, why has that happened? Can it happen in India? I mean, if Unilever Indonesia can fall 90%, that's like, I really want to know why. Because that's an emerging market, India's an emerging market. There are commonalities. How can something fall 90%? Then the same with the cigarette company. Uh, I asked many analysts. They couldn't figure it out. Young analysts. And then finally I figured out, let me use AI. And again, ask sharp questions and, like, just see if I can I think I got some answers. I wouldn't say it's complete. I'm not saying the research is complete. But I'm saying that this art of, as a young analyst, either your boss or you will come up with you want to see a pattern recognition. Pattern recognition is at the heart of taking a good stock. So it's very important. So there's clues everywhere. So any good analyst should. The shocking thing is, no good analyst has looked at Unilever Indonesia and why it is down 90%. It's the same Unilever in India, which is trading at 50, 100 times earnings or whatever it is. So, so the so for an analyst to be valuable today, he has to have this sort of. He has, in this age of clutter, you still can parallel process and see patterns where and now you have the tools to exploit it. So you can become a super analyst if you give such ideas to your fund manager wherever you're working, buy side, sell side, or you're an investor yourself or whatever. I mean, I'm just giving some of these examples to stretch their minds to thinking that way. That the old typical job of being given a question, I will go linearly at it, has materially changed. And so today you need to keep constantly be curious and develop this habit of. So let's put it the other way around. So we spent say an hour on a question, and then we spent 20 hours finding the answer. Now, in a way, that's reversed. If you ask the right question, AI gives you the answer in an hour. So you freed up 19 hours of your time, theoretically speaking, to ask even sharper questions. So some guys are going to you put this to devastating effect. Think of a world where you have a 8-hour working day where you spend 5 hours asking really insightful questions, and the answers are just fleeing away. I mean, that's like me having 100 MBAs working for me. And then the question is, are you capable enough to ask smart questions for 5 hours? Then you'll be invaluable. So, I mean, I'm just like thinking about it like when I'm talking to you. So, I didn't come, but that's really what it is. I think the dilemma is that you're caught in this world where it was 1 hour of question and 20 hours of work. And I think it's, and education hasn't prepared us for this sort of. So, an analyst, if he starts thinking along these lines, a young guy, that would be the future, I think. So, a future where you spend an 8-hour day asking sharp questions is a powerful word. It's a very powerful word. So, that requires conscious training and all of that. So, that's what I think. That's what the new analyst should do. Hmm?
True. Are there
Yeah.
any questions? So, just thinking a bit aloud. So, one of the inspirations for this book, Letters to a Young Analyst, comes from a very old book called Letters to a Young Poet, Rainier Maria Rilke. And I think one of the very important insights, and it was written in a different era for sure. So, one of the very important insights and the advice that the author gives to the young poet is to uh, not seek instant answer to the questions that lie within you, and sometimes let time answer those questions. So you have to learn to live with your questions. Now we are again living in a world again with AI and instant answers. Even if you ask the right kind of questions and the answer appear immediately, a lot of time is freed up. But are there any questions, according to you, uh, which probably AI cannot answer uh, currently, and you only need to let time handle that? You sit with that question deep down, and as I say, when the student is ready, the master appears, right? In the same way, when the question is ready, when the question is really ready, the answer will appear for someone rather than you going and asking AI to have instant answers. Is there any question that you can think of that probably only time can help the analyst answer that?
Absolutely. No, no, let me rephrase what I was saying. What I was saying that I still say AI is a useful slave.
Hmm.
It isn't your it isn't a colleague or your peer group or your boss. He is a useful slave, and that's how I see it. I'm not enamored by it, but I can put it to use. But the questions always remain, and life is the so time is the canvas on which your questions get framed and answered, or your questions drop. So that job of time AI can never take over. So the fundamental questions that have dogged humanity will always be, and that only I mean time is the Lord in that sense. So time is the great revealer. It is the great equalizer. The whole canvas plays out on time. Karma plays out on time. The time is the grand canvas. Nothing replaces that. So that AI cannot help you in that. So your core questions, um, as Socrates always said, that all that I know is I don't know. So that this is something that transcends question answer dialectic, and that remains. That I don't think. That's the glory of life. And they say that one day your question cease. They just drop. They don't get answered. So questions just drop. And you are that emptiness that is beyond question and answer. So the ultimate questions have always had, I mean, that always ends that way, has to end that way.
I just imagining going to AI and asking what is the meaning of my life. And I remember 4 years back when I asked you that question, you said there's no meaning of life. And I think that's probably one of the questions that ceases to exist, because once you find the meaning of your life, that the question does not exist anymore. And you don't
No,
seek to
then
answer.
life is utilitarian. If
That's so
life
true.
has a meaning, you mean that you're just a cog in the machine.
Right.
Okay. You're much more glorious than that.
That's so
So I'm not saying life is meaningless. I'm saying life is beyond meaning. You see, you're complete. So why should you have a meaning? Meaning means, it's like it's like a doggy is washing your clothes and वो सब नहीं है. So life at the end of the day is beyond meaning,
That's so
which is much more profound than. So the pessimists take it as meaninglessness. No,
true.
I would say it transcends meaning and meaninglessness, both. So
Like you
it's
said,
a it's a Mm.
there's some questions which cease to exist after a certain point of time. So probably that's one of the questions out there.
that is the only answer. The only final answer is that questions have to drop,
The question.
because every question leads to an answer. Every answer leads to 10 more questions.
Hmm.
And so there is no answer but to drop into where the question drops, and you're just uh, you're just that emptiness or that silence or whatever you may want to say. So what question can you answer?
That's so true.
I mean, now they now the now f- now so even the Big Bang theory is now being questioned by more, a lot of new. So there are all sorts of extreme views floating around. I mean, one view floating around is that this universe is living inside a black hole.
Hmm.
So there are all sorts of so questions never really get answered.
I think
So
the more I hear you, I think also the last time and also this time, what I really probably get to, and probably also my experience, is that it all starts and ends with knowing yourself, whether you want to become a good analyst or a good poet or a good writer or a good investor. And I think that is one task that we generally, when we are young, we relegate it to, okay, I'm going to know myself once I am 50 years of age, once I'm retired out of this life and active life. Currently, I don't have time to answer that question about who am I really, right? So I think I am not sure whether you agree with that, or you also have that point that it's whether you want to become a good analyst or a good investor, it starts from that self-awareness of, do you really know yourself? And if you know
yes,
that, if you know really that, and I think then there's no other question which really exists in that line, right? So you
correct.
know it. So so probably becoming a good analyst is more of a study, education in knowing yourself and philosophy and
So it is
uh,
it is sadhana. I would say it is a meditation. It is a meditation, and many professions are. I'm not saying this is the only
mm,
profession that is, but every profession can be. But I wouldn't postpone the day, because life is fleeting, and there's no guarantee 50 you have 50 years or you have 50 minutes. And if you don't get it now, you'll not get it 50 years from now either. So it can't be. So the rules have been set by the universe, which is you don't know how long anyone lives. It can go today or it can go in 100 years, but it will go. And so the luxury of postponement is not available. You might delude yourself to believing that it exists, but it really doesn't. And if you do that at 50, you will postpone it to 60. And yes, I mean, to lead a fulfilled life and to experience the magic of life. And I think being in capital markets actually can make you very I think it can make you materialist and destroy you totally, or it can make you objective and detached and help you evolve. So both are both. I think markets following markets is a great accelerator. Can be because you are seeing history every day. You're seeing companies rise and fall. You're seeing many things. So what you would experience in 50 years, the market, if you follow for 50 years, I mean, like you would get a much more denser, compressed, more data points in that period of time because in a way every company is also a history to itself. So and some patterns repeat in every company and so on. So for instance, the East India Company also died. So will every other company that you're following. So so basically end is also certain for the largest of companies. So there are these so markets can help you. So nothing stops you from learning about a 260-year-old company and learning the gist of it. And that lesson is valid to a large cap company today also, some of its lessons rather. So you can learn a lot. I think markets make you wiser if you survive. So yeah. So analysts have a I think it's an exciting I think analysts should also have some interest in history to see patterns and to see, and none of these patterns have not been repeated in the past. So the other thing I would encourage analysts to do is to look at 30-year charts, 50-year charts, 10-year charts, 20-year charts. You know, good way to spend an hour every day is to uh, just look at charts, long periods of time for various companies, various commodities, whatever. And you'll see, and then let your pattern recognition mind learn from it, that because history may not repeat, but it always rhymes. So with a different twist, it comes back with a different twist. So I think analysts who don't have a sense of history uh, can get caught up in a bull phase or a bear phase and totally miss the tsunami. Some things repeat. So, so I think that's the other thing that analysts should keep in the back of their mind. They should have a sense for history, financial history, events, and. So, for instance, Trump putting tariffs on India. The same thing was tried by the first George Bush in '89, I think. So patterns repeat. So it isn't like what Trump is doing is happened for the first time. So that gives you some perspectives. Then gives you some perspectives that how things turned out, or that India was sanctioned in 1998. This is not the first time we've been relaxed, and the market did well despite that. So all these things help you come to a control. Otherwise, a instinctive young analyst will sell the market because tariffs went up. You see, negative news should drop. It hasn't dropped. So, so understanding your history and linking it all to is helpful in smart. So there are many counterintuitive things you can see in the market. So, for instance, even in this recent skirmish with Pakistan, the both the Indian market didn't fall, nor did the Pakistan market fall. So it's interesting. The market seeing some. I'm not saying what the conclusion is, but I'm saying analysts should look at these things, and because there are some, you'll get got to be curious because you will come to some insight or understanding that will be helpful. That sort of like when Article 370 was removed, the Pakistan market went up 45% in a month or two. It's just curious. I mean, everyone, the Indian media was going about how Kashmir is going to burn, wrong decision, this, that, and the other. I was tracking the Pakistan market. And the Pakistan market said that look, Kashmir issue is basically over because it went up 45%. So one headache is gone. I mean, that's how the market sort of reacted. And market has been broadly right. Market sometimes, so young analysts should have a sense for history, and then they won't panic in crisis situations. So like COVID came, lots of people sold, or for instance, there's so many such cases. Like when the World Trade Center fell, every Islamic market doubled. Yeah. You would have thought otherwise. But the market basically said that this is sort of the peak of Islamic extremism and is probably going to dip from here. And over time, that has turned out to be broadly sort of right. No big September 11th like World Trade Center event happened after that. So it's just interesting for financial analysts to wear that little and look for various patterns. It just make them better investors because the risk young analysts run is that. So I remember when the rupee devalued. I mean, I'll give my own example. When Manmohan Singh in early 90s devalued the rupee, it went from whatever 16 to 30, 26, 30, or I forget the exact number. I was a young analyst, so I sort of froze. Then I spoke to some of the wiser people. I spoke to the chairman. I spoke to one of some of our top investors and all, and they seemed surprisingly unaffected. I was like pleasantly surprised. And they told me the market will go up, okay, as a result, which is what happened. So then you had the 92 rise, you had the 94 rise, and all of that. So, yeah. So when you're seeing it the first time, a young analyst freezes. So did I for a short while. But I was lucky to have wiser people who were just laughing at it. I thought I'd lost my job maybe because, basically the rupee is depreciated, right? So your value is halved, basically. But it was interesting how. So I think that gives you a backup. So when some crisis unfolds, you can place it in a historical context as to what markets did in similar situations in the past. So you don't react in negative ways.
I think that perspective is so important. And I think also, like you mentioned, being lucky to have the right kind of mentors around you, right kind of bosses
Yeah.
around you who've seen that thing. I think that is such an important.
Oh, that is heaven. That is grace. I mean, that is, you have to be blessed. I agree. I mean, I think that is to basically be surrounded with good people is the ultimate blessing. Your bosses, your colleagues, and everything. And I'd urge young people to select that rather than a bigger pay package. and go for the biggest salary and, be on that. Because surrounding yourself with good people and so if you have an option, you would rather work with such people than work with people uh, where you just get a higher salary. So yeah. So I remember there's some offers much higher than Morgan Stanley came up when I got hired. Okay, but the best thing I did, again, advice from seniors at Morgan Stanley, they said like it was all laughable. So and which it turned out to be true. So I think some of the one of the biggest misleaders can be high salaries for youngsters. That's the other point that I don't think they should go by. They have to treat the first 10 years as university. They're just still learning. So what you learn in that decade is what will make you a good investor. So you're really getting paid to be a student in the first 10 years. So walk with that hat in your, walk with that thinking cap. Don't get so obsessed with your bonuses and salaries because whether you like it or not, it is university. You're learning. And as long as you're learning, stay in the job. And if you learned a few things, you'll anyway make money. But very often, burnout, lots of things go wrong because of you chasing the. I mean, for a sophisticated investor, he will never hire a guy who's just looking for a higher salary. He'll be fired. That's clear. So I would never hire someone. His salary is his motivation. Never. Never. Because you're just giving the wrong incentives. You're linking. It's not going to work. And very often, I mean, this is my other experience that a young analyst should know. I mean, because papers carry this IT guy got a 1 crore salary, and this guy got a IIM Ahmedabad, some guy got a 3 crore salary, and so on and so forth. I know lots of people who've gotten that. And if you take a longer view of their careers, very often it disrupts badly. Because in a bad time, that's the first guy to get fired. Expectation from him is sky high. And then the person doesn't get a comparable job because no one else pays him that salary. So you lose time, you become unemployable over time. So it's better not to. Sometimes the best thing that can happen to you is a gradual rise rather than a spectacular. You become a one-trick pony. You become a one-hit wonder. Often, because what happens? It plays with your psyche. You get a very high salary, then your psychic expectation in your self-belief goes out of whack. And, you're taking needless stress also too early. Your ability to make mistakes comes down. I mean, many things can go wrong, basically. Yeah. So the longer career is one which is built on learning well and, treating the first decade really as and I say this because I've lived that. I'm not saying it because that's exactly what I did. So and this is what I recommend everyone that because it will take you at least a decade to see various aspects of markets. You'll be in situations, you'll be in crunch times, you'll be in a crisis. Lots of things will happen. So and you'll be better off every time a crisis happens, actually. So you'll get better. So there is no shortcut. Hmm? Yeah, and AI, none of that is going to change that time horizon. I mean, nothing. It's not going to help beyond a point. Of course, it'll aid your. It might accelerate things, but sometimes time. It just takes that much time to ripen and become mature in your thinking. So so let's say these are some of the things that I think are important for young analysts to be aware of while they make their career decisions and the paths they choose. So I've seen that because sometimes I look at, so we have this Morgan Stanley alumni, uh, it's a very, it's become a very big and a very impactful alumni because many of the alumni then, went into Oracle, they went into SoftBank, they are in BlackRock, Blackstone. I mean, CFO, a lot of these are all. So all these guys, basically because they took this sort of, they went through that university grind for a decade or two, and they've had, I would say, extraordinarily long and impactful careers. So I'm literally surprised how you can find one Morgan Stanley alumni in virtually any Fortune 100 company or any large private equity fund and so on and so forth. So I think there is some value to getting, spending a decade getting better. I think same thing in India. I mean, so many people I find who are ex SBI and in Indian corporate circles, ex SBI, State Bank of India, less so now, but like a decade or two ago, many guys came from few institutions like that. So, um, I mean, I remember a lot of people who were at SBI Cap. Uh, when we first came to India, we had a relationship with SBI Cap, so we were working with them. I used to sit in the SBI Cap office. And how many of those people have who were youngsters? Prashant Jain, many of them. I mean, many of the people in the mutual fund industry, even in India, they were all working at SBI Cap as young analysts. And, over time, they've really matured well and gone far. So they've had long, fruitful careers, and so I'd say, significant percentage of that batch is done very well. So these things, I think, while analysts are seeking out, they need to have perspective as to how, the background of lots of today's success stories were because of the choices they made many decades ago. So,
So, not moving on to the actual analysis part, and again, not about how to analyze, but the real part where a lot of analysts struggle in the sense there's like an existential crisis that a lot of people face, and we understand that there are very few things which are harder in investing than watching your thesis fail, especially when you've defended it in public. And a lot of analysts are public analysts, right? So they take a call, they announce publicly that this is the call, and that the thesis fails. How do you deal with that inner pull to be right at all costs? Because we are taught to be right, and as analysts, you expect it to be right all the time, right? Which I going by your answers is not true, right? You have to make some mistakes. You make some mistakes along the way. But being a public analyst, right, in the eye, and your incentives are structured that way, and you need to take that 10 years of university education to develop yourself. In the interim, how do you deal with that inner pull of being right at all cost? Um, and has letting go of that need to be right all the time improved your ability to make better, faster decisions?
absolutely. I mean, you have to decide whether you want to be right intellectually or you want to have money in your wallet. You want to make money or you want to be have. So you have to be very clear. So if you think you want to defend your ego against the market, you will be destroyed. The market will take you for a ride. So you have to be clear. If you want to be an investor, you have to put your ego behind. If you're wrong, you're wrong. And take it and turn around. I mean, I remember there was a Stan Druckenmiller. I was at, this is years ago. He was in some conference, Morgan Stanley conference, where he was giving an investment thesis on one of his large holdings. Okay. And so we were quite, I mean, I was a youngster. We were quite, so there was, coming from Stan Druckenmiller, everyone took it pretty seriously. And then the stock later, I remember the stock collapsed or something. So there were lots of people who were also very gleeful that, Stan Druckenmiller's got his comeuppance now. And so some of us did homework as to like, how did, what happened to Stan? And then we realized that, I think one of our bosses is his relative or something. So they spoke to Stan. And he said he spoke about this thesis at the investment conference. And from looking at the audience, he realized he's totally wrong in his thesis. So he sold everything. And he went double short. Okay. So where we thought he would have lost money, he made tons of money. Because he did not put his ego in the middle. He didn't care that he told everyone this idea. He sold the next day. He went short the day after. So you decide. You want to protect your ego or your wallet. It's a very clear decision. So in the markets, you cannot have a rigid point of view. So let's face it. So you don't have, you should not ideally have a very rigid viewpoint in the market. Because the market's changing every day, there is new data, there's everything. So I don't, you can never win defending your ego against the market. And that inner turmoil and all is set up because you want the market to obey your intellect. Okay. So this is like the tail wagging the dog. So you're guaranteed to have blood pressure and sleepless nights. It's because of the choices you make. And so you think your small intellect is going to figure out the market? No way. No chance. So if you go as a humble devotee to the market, you might be able to figure it out. If you think you can sit on a high chair and figure out the market, no. So I mean, most money managers, therefore, I mean, we laugh at our strategists and all this because of opinions and opinions and opinions, and investors have a blank mind. I mean, we're waiting for the market to whisper something in our ear. So we are not waiting to have an opinion, and so the market better follow my opinion, and otherwise I'll be upset. I mean, my God, that is that's blasphemy. I mean, that's my view. So one should keep one's ego aside and focus on the wallet. So
I think a lot of time it
Yeah.
also happens that we connect or we probably equate the idea with our identity. So we come out with an idea and we defend it so much that it becomes our identity, and it's so difficult to let go of that.
Yeah, but then life finally you have to let go of your body also.
That's so true.
So the problem then is your inability to letting go.
Mm.
So nothing else. Life is flowing. Market is flowing. So when you create this unnatural barrier and you think it's important for you, then you limited yourself.
Mm-hmm.
So so that's why markets will either destroy you or make you very detached.
Mm.
So therefore markets are very good because you get slapped every day.
The great humiliator, as they say,
Yeah, he's the great equalizer.
great equalizer.
So he's like an enforcer. The day you have, you think you're making things happen is the day you'll get hammered.
That's such an important lesson. I think, again, if I were to just bring in that Stoic philosophy or Epictetus, right, who talks about the dichotomy of control. We think we control a lot of things, even when reality is something else, right? We are controlled by something else. A lot of things are not in our control, but we still make predictions. We still want our models to be perfect, and we still want to get that last decimal place in the DCF that we do for a company that we have no
Correct.
idea about. Yeah.
There's some Zen story, there's a lizard on the wall. So all the lizards are going out. It's the weekend, so they want to go for a party or go to a bar or something. So they ask the lizard also to come. And he said, मैं कैसे जा सकता हूँ? I'm holding this roof up.
Oh God,
तो हमारा भी वही हाल है. ज़्यादा फर्क नहीं है.
so true.
We think so it's better to be light on yourself and let it flow out. Let it uh, don't take yourself too seriously, basically.
Charlie Munger, where he's spoken about having that 5 minute mind, where decades of accumulated knowledge allow him to size up a situation almost instantly. How has your own intuition? So I think it's more about intuition after you've done the hard work. So how has your own intuition evolved over these years? And do you remember when you first started trusting your gut? And can you share an example where that intuition saved you from a poor decision?
I would say that I have actually always gone by my intuition. Since, I mean, that was a decision I made early in my life. So I think I made that decision in school. So I have, and the in a way there was, I thought, no good advisor around me. So my default option became that, and on hindsight, I would say that is one of the key things I sort of pat myself, the younger self, that he did that I think has saved me uh, most of my life. So yes, but your intuition gets better. Your intuition gets better in markets, especially because you see patterns. You become very good at interrogation too. I mean, I think when you meet lots of people and so on and so forth. So I think we'd be very good we'd be better interrogators than many agencies, I'd say, because you've seen so many. In fact, you recognize physical facial characteristics of entrepreneurs also. So yes, it gets better, but I think having an open mind and not being not setting yourself up for targets and so on and so forth, or setting yourself in a time bound trap that I need to double my money in 6 months, or I need to do this, that, and the other. I think that's when your intuition sort of leads you wrong, because your feverishness sort of is like a cloud. It's like rain falling on the windscreen of your car. So your feverishness, everyone has intuition, in my view. It's not like intuition is a unique reserve of someone or the other. So the universe sort of, I think, communicates with all of existence. So intuition is a channel that I think almost everyone has, is the noise in your brain, is the feverishness in your brain, you challenging time that I have to, you know, that it's my way or the highway. And all of that is the reason why people don't listen to it. And so when you see scams where some regular person parted with 3 crores and lost 3 crores because of some phone call he got for whatever reason. At the end of the day, these reasons work because the scamster taps into some feverishness in you, that desire to either get rich fast, or you get seduced by some voice, or you get blackmailed by some voice, whatever. But at the end of the day, that feverishness exists in you, which causes you to, or the fear of jail, so you part with money. So there are, sometimes you wonder why all this happened. I mean, because nowadays it's there in the papers every day. And in the market, you see that all the time. So I would say your, very often your underperformance and your misjudgment is when there's some sort of feverishness or turmoil in your head. It's either emotional, it is, you feel you're missing the boat, you want to hit it big, you want something that causes you to flutter. And that fluttering in markets is lethal. That fluttering is lethal because it can really. So there are some, really smart guys I know I know a recent guy who's taken a big stake in a company which is got all the right elements. It's got good promoter. It's a good business, but they're getting into they're sort of reinventing their own market. But this person probably wants a huge home run. So he made this, I don't know, I mean, I'm guessing some 20% of his portfolio. And that's caused great agony because uh, that's only gone down. So the company fits all the sort of traditional elements. Good promoter, he's hired people from Asian Paints and all the multinationals. But some of the elements doesn't make a, you can't put carbon, hydrogen, oxygen together and produce a human being. It still requires a lot more. So which for whatever reason, his desire to hit the ball out of the stadium caused him to take, so he's taken a very significant, and I think that's he works hard. I mean, fits all boxes, but some feverishness in you will cause you to see reality a little. You're imposing your view on reality, or you wish it to be that way, or you're challenging time. You want to get there fast. You don't have that. So you got to be a little timeless. You got to have a little empty mind. I think everyone will be able to see what the intuition is saying, and I think the market whispers in your ear. Market is being generous daily, deceptive daily, generous daily, forgetful daily, efficient. Market has 5, 6 personalities that keep floating in the market, but one of them is generosity, for sure. So sometimes you get stocks that were, you get a price what it was 10 years ago. And so if you've done your homework, then it can be an extraordinarily generous moment. You've saved 10 years. It's like you've seen the end of the movie and you've been taken back to the front of the movie. So, but for that, you need to have uncluttered mind to be able to see things the way they are. And I'm not saying that's an easy thing to do, but But I think if you don't have that, then you run a risk in markets. Because in markets, unlike you run a risk with that in life. I mean, a lot of entrepreneurs I've seen have skidded away because of one or two wrong decisions made out of. I mean, for instance, Malia also ran a very good business. I mean, I know him. I feel sad for him. I mean, he was a great entrepreneur, made mistakes, whatever. But at the end of the day, getting into the airline business was, um, I mean, only he has to explain why he did it. But just that one decision made out of, you know, hit him badly. So keeping your clarity going, um, and if you don't, it can hit badly entrepreneurs, market players, people in life, you know. So, and markets is much more pronounced because you're playing with real money, and things can go down. So, like for instance, today I was reading. I don't know how true it is, but I was reading some people said that the Chat GPT-5 that came up is underwhelming. It isn't the leap that people thought. So now this is a data point. Now this is a data point because I mean a lot of the health of the American GDP is resting on the backs of the capex, which is driving AI. So these are facts. I'm not saying it's good or bad, but if you box yourself in a corner and think that AI is going to change the world or it is not going to change the world, both are not helpful. You just have to see things as they evolve, and sometimes decision points come as a result. I mean, like to give you live examples, we had a large stake in Z television those days. So we had come in during the IPO. So we had a significant stake. We had taken it at par. It had gone up a lot. It was like 1600 and so on. It was the only private television channel and, dominant. Subhash Chandra ran a great show. Uh, I'm talking about the 90s, 80s, 90s. Then one day we had a 4-hour meeting with Sony Entertainment. It was unlisted. So I spent uh, 4 hours there with, I think, Kunal Das Gupta. Kunal Das Gupta was the MD. And I came out and we started selling next morning Z. So now, till yesterday, we were large holders. But intuition changed because you saw also Sony Entertainment and you clearly saw a future where private competition is, breathing down the neck. It's all going to emerge. So this Doordarshan Z sort of option is going to, and you could clearly see Star TV would be there, and many other things would come. Came in a flash. So we did. So now, and there were lots of analysts at 1600 who thought, I mean, most analysts thought this is going to go to much higher. It was cheap. And so your ability uh, to change is a function of your open-mindedness and you not getting attached or in love with or in a self-reinforcing loop with yourself. You can argue everything is cheap. There are people who think land at 100 crores an apartment is also cheap, and even if it was 150, they think is cheap because they think God doesn't make extra land and so on and so forth. So there are all sorts of characters in this world. But all that reflects in prices. So your ability, for instance, okay, we had a take in Asian Paints, lovely company, you know, great ROEs, great track record. We had it for years, it went up multi-fold for us until Grasim and GSW announced that they're getting into. So I was waiting for one day like that because no high ROE stays forever. Competition is bound to enter. And so Asian Paints was just very lucky that no one read his balance sheet 10 years before we did. That's all. They're in the cement business. They're in the construction business. They distribute cement. They could distribute paint. Their business is 10% ROE. This guy's at 40-50% ROE. So it was a wonder why it took so long. But in the meantime, so then I did a test. I called up all my wealthy, smart investors and I said, so what do you think of Asian Paint? I'm thinking of selling. I do this often. अरे everyone said नहीं नहीं क्या blue chip है यार I mean like सोचो ही मत क्या रिटर्न है क्या पागल है क्या बात करता है बेचने का कुछ नहीं it is still a great company I'm not saying it isn't but prices are independent of companies often because perceptions are in the middle no? So I sold and this even made me much more happy that everyone still loves it so we sold and on hindsight it was the right thing to do because even today the prices ever since the Grasim JSW announced the prices have done nothing. And then even the promoter announced that he's selling some 500 crores of shares, something like that. I think a few years ago that announcement also came. So my point is that if you keep your windscreen clear, you'll be able to see the road ahead a little better while you're driving your car. And the windscreen here is your own chaos in your own main cause jumping in your brain. Even Vishwamitra fell for it. Okay. So we are nobody. Okay. So if Vishwamitra can get seduced by main cause, then like everyone is susceptible to main cause. I mean, I'm using it metaphorically, just to main car doesn't necessarily mean a main car, but money is a main car, power is a main, everything is a main car dancing, no? So, so if that disease is in your brain, then the odds are stacked against you. In the sense, one day you will. It's snake and ladders. Just like snake and ladder, it takes nothing to go all the way back to square one. And in markets, more so because you're dealing with real money, and the ball is coming at 100 miles an hour every day. And the bowler is new every day. It's not the same bowler. So the pitch is different every day. So you increase your odds if your windscreen is a little more cleaner that you can buy also, you can sell also. You can be detached and attached at the same time. You're like detached attachment. But frankly, the Gita after 18 chapters is trying to tell you the same thing, which is the market, you face it every day. So, and I think life also, I mean, why only market? If you're running a business, also is the same thing. So this is, so I think intuition is a very powerful weapon to have, and one should own it. And basically, you have to trust yourself. Basically, life is digital. You either trust the universe or yourself or you don't. And if you don't, then bad health is inevitable because you feel you have to do everything. That the universe is untrustworthy. Everything मुझे ही करना है. सभी कुछ मुझे करना है. So then you pay a price in terms of fatigue, health, diabetes, hypertension. At the root cause is a fundamental distrust in your own, in your own intuition, and that the universe is a kind, compassionate energy. उसमें डाउट है तो ये तो इनएविटेबल है. तो ये डिजिटल चॉइस यही है लाइफ में एक्चुअली. So you either trust your intuition and universe or you don't. And if you don't, then the universe also steps back. Your intuition also steps back because you want to be in command. They're very kind and compassionate forces. They let you be. They give you the freedom. So then you're off on your own, and then you can't sleep at night. But these are classics. These are classic. A person need not say more. If someone says, "I can't sleep, I have diabetes, I have blood pressure, I have this and that," you know the road he's taken. So, so that shows up in great promoters too. So, for instance, where I used to be, one of the reasons we had a big stake in Hero Honda is whenever I met Brijmon Munjal, he his phone would barely ring. He would never end the meeting. He was a polite man. So when he had great what do you call old world grace and politeness, he would end the meeting. He would look at his watch and get away. He'd let you finish, and you finish the meeting, you'd leave. So at those, so if a promoter's phone is ringing all the time in your meeting, so that itself tells you quite a bit, you know. So uh, I've seen great promoters where uncluttered. You can meet them last minute. Uh, they're available in a sense, you know. So I think much of these habits can be cultivated in your life. So if someone's phone constantly rings, it tells me that I don't know what it tells me. Or it tells me that there's some chaos, inner or outer. I don't know. Which it can happen one day, 2 days, but if it's a pattern, then yeah, someone can be in a crisis on a day basis. But I see people whose phones ring, they ring every day. And there are people whose phones barely ring, and that is how it is every day. So it's just a small analogy, but yeah. So if you think the whole universe is against you, then your intuition has very little space to flourish, and so you'll panic at the bottom, you'll get exuberant at the top, and if you do well, you think you made it happen, that you're a genius, and so all the wrong lessons are being learned. So even bright minds like Isaac Newton went bust in the market. That's a fact. I don't know whether you know what happened to Isaac Newton. Yeah. So he first put, I mean, just to give ratios and proportions, he first put a small amount in South Sea bubble. And this is the guy who invented gravity, calculus, considered one of the greatest physicists of all time. He put a small amount in South Sea bubble. It went up, I don't know, 3-4 times. And so he sold and felt I mean, like I'm the inventor of gravity. I figured this out also. So then the price goes up further. It goes up 5, 7 times. Then what does Mr. Newton do? He puts all his savings at the top of the price, not 1% or 2% of his wealth. He puts all of it into the market and loses it all. So what can you say? It's so clearly markets are not for everyone, and it's not for the brightest or the dumbest. So that's no criteria. It's a sort of having a combination of intuition, ability to take pain, as we discussed yesterday, uh, patience, insight, and getting psychology right. Getting psychology right. Are you on the exuberant? Is the stock at an exuberant point or at a depressive point? So, uh, yeah. But there are people who are momentum investors who play the momentum game and so on and so forth. Maybe they're cut out for that. Maybe they're cut out for that. But God bless them. I think I mean, I couldn't be able to. I wouldn't be able to do it. So intuitions, I think, is an important faculty to create for living a full life. I think so. Not only markets.
A long runway also provides you that ability to believe you and trust your intuition. If you have a long runway, like the patience, either like you mentioned, you're talking about someone who has that patience of not doing something every day, but waiting for that market to whisper. So having the flexibility of a long runway or a patient mindset or patient capital at hand, that also is one of the ingredients in terms of trusting your intuition. So intuition everyone may have, but when you trust that, once you have some setting or the environment really helps you in that way, that you are allowed to probably
Yes.
trust your.
No, I would go even further. If you don't have patience, you are going to be a disaster, however bright you are. So I know lots of very bright people who are impatient. It ends in disaster. Because the act of challenging time, that this has to happen my way or the highway. I mean, in my scheme of things, time is the Lord. It does when it wants to do. So, so you can't challenge it. So, and if you do, and impatience is basically a game of. So even taking on debt or being impatient, all these are challenging times. So you can go seriously bust when you make a challenge with time that I will be able to pay this debt in 2 years or 3 years. It's you challenge time, and so we've seen so many companies go under. Uh, yes, some succeed, but that keeps the game going. That's why others also fall into the same trap because statistics is wonderful because it'll always give you that hope. That's why people gamble, right? That's why all the online gambling and all of that people want money. So statistics is a fantastic. What do you call? Uh, Depends on your feverishness. You'll see the positive side of statistics or the negative side. So that's what it is. Um, but I go further that I think one should learn patience is almost like a prerequisite. So you may go to Harvard, you may go to Wharton, but if you're impatient, all right. So there's endless stories. I was reading about some guy who was a garage attendant or something in the US. I forget his name. And when he died, he had $8 million in his stock account that he donated to the library of the town and so on and so forth. So being patient and being out there on a daily basis is more important than earning a high salary or being very bright. So this guy used his time as a park attendant or parking attendant or something to read the Wall Street Journal, Barron's, and so on. He did it for 30, 40, 50 years and did very well. So, but patience is also something that I don't know. I mean, maybe you're born with it. I don't know. I find that lots of people uh, are just impatient by the very nature, you know. So many qualities have to align for an entrepreneur or a market man to be wealthy for uh, long periods of time. So I also liked G.D. Birla's letter to Aditya, his advice. I don't know whether you have read it. It's worth reading. So he says it. I mean, I can't summarize everything, but he says things in one page, but he says profound things. He says like treat food as medicine, you know, then no greed, don't let ostentatiousness get in. I mean, it's quite amazing that in one he summarizes health, secrets to wealth, and how his grandson should conduct his life. I'll try to pull it out. It's somewhere. But it's worth a read. So basically, if money seduces you, then you have a problem. If you somewhere you get it wrong, you know. I'm saying over long periods of time. You might do well for 10 years, 20 years, and so on. But there are certain patterns where, multi-generational wealth is there. There are certain patterns that you see in how they conduct themselves. And that exists in some of the old families of Bombay also, Tatas, Mahindras, and all of that. It's obvious. It exists. So
What about the idea of writing? I'm not sure. Do you believe in writing down your investment rationale? Because I think it's one thing to carry an idea in your head, and there's another thing to commit it to paper. So, has writing down your investment rationale ever changed the decision you were about to make in the past? Do you believe in that?
yes, yes. I used to write my shareholder letters at one time, and it would rarely be more than a page or two. And so I would always encourage people to write everything in one page and or two, and never in a 20-page report. Because the so I believe that if you cannot summarize your investment thesis in a paragraph or maybe two, it's not worth investing. So if you have to give me a long history about what this is the reason, you're not going to make money. So I would, in my investment letters, I would summarize my holdings like HDFC in 3 lines, and it would take me sometimes a week to write the one letter or one page because every word had to be. Uh, but you know what? When you do it that way, the reader gets it. Somewhere the energy transference happens that you could summarize all your ideas in like not one idea, but all your ideas in a page or two. And that discipline is fantastic. If you have a mediocre investment, you try to summarize it in 3 lines or 4 lines. It'll be very difficult. It'll be obvious to you that you're fooling yourselves. So it is a good idea to write, but if you can write it in a few lines, or if you can explain the investment thesis with great clarity in a minute or two, both are sort of the same thing, then you're good, you know. So yes, I think the act of writing can distill your thinking and crystallize uh, your what you call. And by writing, I mean it need not be physical writing too. I mean just clarity in your brain that can you expound on it in the middle of the night in 2 minutes, even if you're sleeping. Then, but if you have to pull up charts and you need to show me a whole report, and then I may or not get convinced after half an hour. It's yeah. So I think writing is a good way to distill your idea. And I would take it further that you don't write a thesis, but you write a para. And if you can do that, I think it'll help sharpen and it'll also help you to figure out what is the most critical and what is the less important. And, and you suddenly realize that you're equal weighting average, the big hitter and the small hitter, giving it equal amount of time. That's not good. So that way you will come to the heart of the matter. It'll help you. Any research report is just 5-10 page long, it never made me money. So any thesis, fat thing, never. But a sharp. So I would encourage all my analysts also to write max 1 page. Although I'm not reading it. Maybe you can spill over into 1.5 pages, but no. If you just have to write that much, so it suits the ego of the writer. It suits the ego of the analyst. But frankly, it's it doesn't impress or it doesn't make you money maybe. So yeah, volume of data doesn't help, and hard work and spending a lot of time studying too much doesn't help.
I think relate that to there's this note written by Buffett long time back about Geico where he titled the security I liked best. It was a single page note on Geico, which is I think the only one which is published on a stock analysis done by Buffett himself. It was a single page where he laid out very clearly, like you said, right, in a single page, the entire thesis of
Yeah.
investing in Geico.
No, absolutely.
That also helps you in terms
Absolutely.
of the writer as well, right? It also helps you clarify a lot of things in your head.
Yes,
if
it's
you're
it's
thinking.
it's because it's very difficult to write a short, sharp idea in few lines. So in the Infosys first annual report, they asked me to write a letter. So I just happened to read it recently. So I also wrote like 3 paragraphs on why we invested in Infosys. But that was also only 3 paragraphs. And I think the main argument was 1 paragraph. The other was just wishing the company well and so on. So, so I happened to read it on hindsight. This was written whenever, I don't know, 93, 94. But the habit of writing to the point is helpful, and all the main drivers of why Infosys came out in that 1 paragraph. So I was also pleasantly surprised that I'm not saying it for my own self glorification. I'm just saying that the putting on the core points down on paper and summarizing your investment argument is probably a very good discipline to have. It's good to have a notebook that an investor might carry, where what he invests, if he just 1 page, that's it. This is why I used to do that at one time, and then I would revisit it uh, 3 years later, 5 years later, and so on. So I went through that phase. Now I do it mentally, but it's good to have a diary, which and you know, or you can make notes on. I mean, there's so many more options now. Technology avoids you. You can just do a small recording or whatever. It is a good discipline because if you see it a bit later, 3 4 years later, you will you will learn what mistakes you made or what you did right, and you know you get some. You'll see your own report card in a sense that you have evolved. You got some because not only have you written that, but then the stock has performed in a certain way, and then when you look at it 5 years later, it gives you a sort of a report card as to how your thinking is evolved. So that is a good way to actually also that analysts can do to keep an investment diary rather than like people used to have diaries, an investment diary of ideas, and it can be very helpful to him and to if his grandchildren and also want to be investors, they'll also get something to. It'll be a noteworthy diary to have.
I remember in our last interaction 4 years back, you talked about the idea of being in flow when you're not obsessing over outcomes, but you're simply playing the game for its own sake. Now, the question is, how can a young analyst who's working in a professional setup can cultivate that state of mind where the work itself becomes rewarding and not just the results, where you're playing the game just for the joy of it and not to carry the scorecard in your head? I'm sure it's difficult when you're working in an institution setup and you're working as an employee, but how can a young analyst even cultivate that state of mind, which he or she may practice, if not now, maybe 10 years down the line after that university education gets over? Or
Yeah, difficult to start, I agree. But then, I mean, this is what I would do. I would, as I would take the elevator up to the 20th floor and to my office in Morgan Stanley, I would remind myself that I'm at I'm entering a cremation ground. Okay, try this out. And that nothing touches me. I'm like, uh, you know, nothing offends me. The chaos is not my chaos. So I've already separated myself from the chaos. I'm okay. I get fired, I get fired. If I get promoted, I get promoted. Idea works, works. Doesn't work, doesn't work. When it gets into your skin is when the chaos affects you. So just a small thing where you just remind yourself that this is all, this is not me, this is not real. This is not going to be me 10 years from now. So then you've created some space for being at peace and chaos also. It gets to you because you think you can't live without it, your title, your job, your credit rating, your loan, your car loan, your house loan, your wife, your children's education, everything will run away because then it gets into your skin. So otherwise you can so in Zen, in samurai training. So there is this famous samurai who's written 26 points. I think it's worth reading. Musayashi, I think Musayashi, I may be pronouncing it wrong. Musayashi, he never lost a battle in his life. So then he gives you 26 tips on how to do it. Musayashi. So it's worth reading, because whatever I'm saying is sort of actually rhymes with that to some extent. So he clearly says that I mean, in samurai trading, it is said the person who gets angry or gets emotional will lose. The guy who gets a thought in his brain will lose. A guy who's in flow and is in no mind has no desire to win or to lose. Is just fighting the battle for what it is, can never be defeated. You see? So these are some of those things that he says are how the internal state of a guy who never lost. So he says profound things. He says absolutely profound things. So he says even so he even says that, okay, you may believe in God, but don't count on him to show up. Okay, so he gives you very practical. All of them are absolutely bang on and also applicable to markets. So yes, chaos is there. So the only place you won't have chaos is in death. Okay, life means chaos. Even even Krishna had a murder case on him. Okay, Krishna did not have one day of so-called peace in his life, although he was in equilibrium at all time. That's why we call him an avatar, no? That through it all, there was no equanimity of a Ram and a Krishna was unshaken through everything. If you think in your office you have chaos, look at the chaos in Ram's life or in Krishna's life. Everything is moving every day. So that's the beauty. So don't think that the chaos is the problem. Chaos is just giving you an opportunity to detach and find yourself. Otherwise, you'll be sleepwalking. So don't give yourself the excuse of chaos. Don't give yourself excuses at all. Just look at outcomes. Because बहाने में तो क्या है? बहाने में you can make many Bollywood films. Yeah. तो वो नहीं करने का. तो ये सब छोड़ दो कि जहाँ पे भी है वहाँ से चालू करो. जो भी है, you know. Because you have to deal with a deck of cards that you've been handed out. It's like a game of bridge. Life is that. You can't cry about the fact that you didn't have this and that. Either don't play the game or play the game with what you have. And the odds are you've been given a set of cards that if you, I don't think you've ever been given a set of cards where if you play well, you can't win. Because in that way, nature is extremely fair and is a great communist and a great socialist. It doesn't beyond the point favor anybody. So you look at that deck of cards that you've been handed out, and then try to play your game well. So instead of whining about the fact you didn't get an ace or you didn't get a king, but you do it. So it's your attitude that also plays a huge role in, you know, whether your job is stressful or not. So very often you have to ask whether this job is stressful or the superstructure and permanency that you've created in your brain that is causing you stress. More likely, it is your own stress is clearly your own. And actually, when you ask for no stress, you're asking for death. Yeah. So be careful what you're asking for. So if you want life, you can't have life at peace also. What do you have? But ठीक है ना? You figure out how to live in peace in the chaos. That is the That is the solution. So in a way, so that's what the Upanishads also say, that you have a jiveshana, the desire to live, and you also have a mrutyeshana, which is you have a desire to die. And this is when you ask for peace. So you want to, life is too much. So you've got to be careful what you're asking, actually. Uh, yeah. So escaping stress is also like escaping life. Kya bharosa hai these are billions of cells talking to billions of cells, being heard by billions of cells. Okay, how it all works is a miracle to start with. It all happens. So just enjoy the miracle, yeah, and go about. It's a very short miracle. Doesn't last too long. So don't set too many preconditions on something which is a wonderful magic show. Yeah, just enjoy it. So outcomes will be better if you're if you are in that sort of positive, peaceful state. You'll be happy with your outcomes also.
Now it's tempting to believe that our wins in life or investing, being an analyst or anywhere, there are wins are brilliance and our losses are bad bricks. But over
Correct.
time, the luck as a constant, which is an invisible force in life. So how has your understanding of luck versus skill evolved, both as an analyst and in life over the years?
I think the luck is a probabilistic view of life, and skill is your insight. Uh, I think you need both. Clearly, no questions about it. But I think the probability function uh, works better if you maintain that non-feverish state that I mentioned. Very often, bad luck is also solace that we give ourselves. And I'm not saying luck but I think the probability function is not set in stone. You can influence it. And it influences with, things like greed and fear. The probability function works against you, for instance, very clearly. So if you're independent of greed and fear, your probability function in markets will be different. So what you call luck will also be different. So if you are very greedy, you will blame it on bad luck because the probability function will change. Just like quantum mechanics says that probability function changes with the observer. The observed is influenced by the observer. I think that's sort of true with things also. Yes, you can have periods of bad luck and good luck and so on. I'm not saying that is not important, but over a span of life, the only thing you can do with luck is try to improve the odds. That hopefully good luck follows you, and so which is one of the beliefs of dharmic living and good karma and all of that is essentially at the end of the day improving the odds for you to have a more fulfilled life. And that if you lead a dharmic life, if you do, if your intention is bad, your outcomes will be bad. So at the end of the day, yes, luck can decide when things come, but at the end of the day, I feel that your ultimate intentions drive the ultimate outcomes. So you might have flashes of brilliance and so on and so forth, but your intentions finally catches up. So to that extent, although the luck may vary on a day-to-day basis, I grant that. But over a long period of time, the outcome is a function of your intentions. So, so Ravan was a great guy. I mean, in many ways, he was a Siddh Purush, and he was a brilliant guy and everything. And but intentions ultimately drove outcomes. And he was a master astrologer, so he could play with the stars. He could play with luck. He could do all of that. But it still didn't. Ultimately, it didn't work. It worked for a while. So yes, I think function, luck and skill, all of that is good. But I think some of these, uh, the Indian philosophy of karma, keeping intentions good, not trying to, I think all these have been set to because it ultimately impacts the outcomes in your life. That's all it's saying. And so if so luck isn't luck might change whether it happens at the age of 40 or 50 or 30 or 60. That could well be. But outcomes happen. I mean, like Swami Prabhupada went, who started the ISKCON movement, went to the US at the age of 69 to start the Krishna consciousness movement. So nothing much happened in his first 69 years. But then he wanted to save the flower power generation, the drugs and all of that of the 60s and 70s. So he went to the US at the age of 69. And so while he was going on a boat to America, he got 2 or 3 heart attacks on the way. So you could say it's all bad luck. But he reached America. Then he was living literally on the streets of Brooklyn and New York and so on and so forth. And then one day he decided it's too much. So he decides that he wants to go back to India. So the day he decides to go back is that night he gets robbed. So he loses passport, money, and so on. He can't come back to India. So from that day, the Krishna movement starts. ISKCON starts. And I think he died at 78 or 79. So he died within 9 years. So within those 9 years, 108 temples were set up by him. The movement came alive. It's still running. It still feeds millions of people. So the reason I'm telling you this story is intentions ultimately drive outcomes. So there were patches of bad luck. You had 2 heart attacks, you got robbed, many things. But his work continues even now. So that tells you that at the end of the day, one shouldn't give what you call too much weightage to luck, bad luck, talent, no talent, and so on. Your intentions and what you wish to do, and what you want out of this world and what you want to give to this world has a big influence on outcomes. So those things are in your control. So what is not in your control, don't bother much. Okay, luck, yeah. I mean, who knows? But your intentions are sort of in your control. Your discipline is sort of in your control. You may not be the brightest guy, but who the hell says that the brightest guy gets ahead? I don't think so. I know lots of bright people. So no, it doesn't work that way. So I think we overrate luck, we overrate uh, talent, and we sort of underestimate what is in our control, which is basically discipline. Getting up every day and practicing your trade, your skill, whatever, keeping your intentions clean in a rough and tumble world where everyone looks like a thug and only thugs look like they're getting ahead. But those are things under your control. So as I'm saying, it's a deck of cards given to you. So what is not in your control, don't bother much. Your talent is also a gift given to you. So treat it like a dowry given by God to you when you were born here. So these are the things handed over to you. Make the most of it. Why blame lady luck? Why blame that you're not talented, someone else is more talented, all of that? Why are you looking outside also? Why are you looking at your peer group? So, and don't create peer groups and so on. That actually is, that actually clouds your destiny, because at every point you want to be ahead of someone, and that's not helpful. That's not so. So if success means that you have to beat up another human being, or you have to win by crushing someone, I don't think that's such a helpful thing. My view, but so I would never like to be a boxer or something and then be the world champion because I beat up 100 guys and I'm the best. I mean, I would I would treat that wealth and success as would disturb me. But anyway, that's me. Need not apply to everyone.
The second last question. So, if you were mentoring, say, a 22 or 23-year-old analyst right now, and you could only pass on, say, 3 timeless lessons, what would those be?
Pain, patience, intention. All these three things in your control. Your talent is not in your control, nothing else in your control. You cultivate these three things. Nothing will happen without pain. Nothing will happen without patience. Nothing will happen without. But if you're patient, your ability to take pain, and you keep your intentions right, the heavens will descend on you one day. You're eligible to be on the dining table of the universe. That's the entry pass. बाकी सब बकवास है. ठीक है. आएगा जाएगा जो भी है. I'm talking about things that you can do, which you can. It's in your volition to do. So these three things, I think, I mean, that's what I would say, because I've seen that people who do have a low tolerance for pain, or who are impatient, or whose intentions are sort of murky, finally, I mean, at the end of the day, okay, life is about playing chess with the universe at the end of the day. You can't win. Okay, you'll be checkmated for sure. It's just a matter of time. I mean, it's preordained that you'll be checkmated. Because at the end of the day, you're playing chess with nobody but the universe. So, so you have these three things, the odds are you'll win. So that's what I think. Hard to implement, but frankly, these are timeless lessons, I think.
So, I think in your long career, you yourself lived through lots of booms and busts and crises and bubbles and recoveries, right? When you zoom out across these decades, what has the market ultimately taught you about life itself?
I think market is a great compressor of history and time. In the sense, in one decade, you see a lot of history. You learn lots of, because in a way, each company is a story. It's a beginning and a middle. So it. I think it can accelerate your evolution. I think over the years, what I've learned is that market is very profound. That you're better off uh, worshipping or respecting the market for what it's telling you. Then you talk down on the market and think that what you think is right and the market is foolish. People say that, market is bunch of insider traders, सब फालतू है, सब manipulators बैठा है. This is like you go everywhere, you hear all this. I take a different view that the market is a great master. He's a great guru, a great deity. That if you treat it with that sort of, in a way, we worship Lakshmi with that same intention. You see, so market is Lakshmi. So if you treat it that way, you learn that you become a wiser person, you become a balanced person, you become a wealthier person. So, so I think it's a profound force. It's like a divine force. That's what I feel. So I don't ever try. I would never encourage anyone to manipulate the market. I always want people who raise IPO money at higher prices to rip off the market. So there's a whole bunch of investors who want to either manipulate or rip off the market in some way or the other. But I always caution that you shouldn't do that because it'll come to harm. You will come to harm. So, and there's so much evidence there also. So yeah, I think that those are some of the things that that markets and they do that every time. Like market prices, even when they confuse you, they are telling you something, you know. So going as a going as a going as a humble student is far better with the market than going as an arrogant smartass who has done some spreadsheets, has gone to business. I'm Ahmedabad, and so you know. Uh, so that's what I'd say.
Great. Thank you so much for your time. I think it's been pretty inspiring as always. Uh,
Always enjoyable, Vishal, with you.
Thank you so much.
Thank you for listening. If something in this conversation stayed with you, please reflect on it for a few days before you decide what to do about it. I think that's usually when good ideas turn into something useful. And if the idea of playing the long game is something you want to think about more deeply, I've spent the last few months writing a book about exactly this. It's called The Long Game, and it features 30 investing practitioners sharing what they've learned from playing their long games of their own. The link of this book is in the description below. I'll see you in the next episode. Thank you so much.